One of the biggest goals for all investors out there is to maximize your capital growth over the period that you hold that property. So in today's video, I'm going to interview Ben of 10 quick tips to actually maximize that capital growth. So Benny, regardless of the clients that come into the business, we always try and guide them down a little bit of a strategy that enables them to target some capital growth. So what would you say the number one biggest thing to maximize your capital growth is?
You know, you and I have both read some incredible books. Now, one of the things that we learned from those books was the power is in the land. For hundreds of years, even thousands of years, humans have naturally gravitated, settling their cities and their villages in the best locations nature-wise. Still the case today, like the Sydneys, the Melbournes, the Brisbanes, the waterside property. The power is absolutely in the premium locations and the power is in the land. Like ultimately the bigger the better in the best location.
Exactly. So obviously if the power's in the land, we're going to be searching for houses as well, right?
Absolutely. Now, I think there was an incredible piece of research from CoreLogic. You probably know the numbers better than me these days. But what were they saying? It was over 25 years.
It was a 25-year comparison of houses versus units throughout all of Australia. And the houses have outperformed units by over 96%, which is certainly not money that I'm going to leave on the table.
You know, since I learnt that piece of information, I'm just a house buyer for life. Now,
yeah.
I don't know anything about commercial or industrial development. I'm just like a residential investor. I'm sure there's incredibly good opportunities there. I talk to people every day that have made bulk money on units, but it's like, had they have bought the house at Cronulla Beach or St Kilda versus the unit in St Kilda or Cronulla, then they would have been significantly better off. And so you and I are just both going down that. If it's 96% better, door closed. You know what I mean?
Yeah, exactly. And it's, you're thinking about capital growth, how to maximize that over the longer term as well. It's super difficult to speculate and guarantee short-term capital growth. So if we're thinking longer term, and the numbers don't lie over 25 years, let's just be on the safe side there.
Without a doubt. Now, there's another cool piece of data around that as well. There's a study by CoreLogic too, where they looked at the biggest metro markets versus some of the biggest regionals. And again, I think it was a 20-year comparison.
Yep.
I think they found an
85% difference. So that was the 7 capital cities around Australia compared to the 7 largest regional markets. So I think that's important to recognise. The 7 largest regional markets, and it was an 85% difference over a 20-year period. Now, just those two things alone, buying houses and buying metro markets, that obviously is going to put you in a far better position.
Based on the history. And, when you look at the top suburbs in Australia, like the top 50 suburbs list, it's like Byron Bay, regional market, you know what I mean? Like, not many of the top suburbs in Australia out of everywhere have been the capital cities. So again, these are averages that work, but I don't want you to go and buy Dubbo, for example, when you could buy Sydney, or you know what I mean? Like go buy a Bendigo when you could afford Melbourne.
I can go to the casino and I can, go play the roulette and I can put my money on a single number. And yeah, the returns are going to be bigger if it lands on that single number. But if I just go on red or black, the odds for me are going to be way higher, you know what I mean? So you're playing the averages here. You're playing the odds to put them in your favour, right?
Absolutely.
Love that little analogy.
Sorry, my dog's just
Redmond
now. Hey, Red.
Coming in. Now, the next one, which we've seen contradicting data on, is proximity to the city and proximity to the beach. Now, for us, and when you look at the numbers around Australia, closer to the city, closer to the beaches, the higher the price of properties are.
Exactly. It's just, for me, it may not be data back because Jeremy Shepherd just did an incredible study on Sydney where he looked at 25 years worth of data across every single suburb and he mapped them. And what he found was that places like proximity to the city mattered at the start of a cycle.
Yeah.
Like generally closest to the city and the beach goes up in value first when people start speculating. But then over the course with the ripple effect over a full cycle, Penrith theoretically has almost the same chances performing well as a Cronulla Beach, give or take 1% either way per year. Now, that's pretty statistically significant and no one else is talking about it. But for me, I still want to be buying closer to the city or the beach if I can afford to, for one major reason. That's because people earn a shitload more money there. and therefore they can pay me more rent. They, generally don't get in the same distress situation during bad environments, and prices will go up at the same average annual rate, but starting at a higher base, which means my long-term position will be, instead of having 20 little properties, like having 5 more expensive ones, and it's much simpler for me to manage.
100%, man. And we'll go into quality of suburb in a little bit, but on top of that, like proximity to the city or the beach, we also like to go for the nice high quality pockets of that city. And you can see this in any of the major metro markets around Australia. There's higher quality locations and lower quality locations. There's areas where the owner occupiers flock to, and there's areas where there's lots of renters or lots of public housing. So for us, it's trying our best to get closer to the higher quality locations. And if you're stuck with like a more limited budget, then you've got to make it work with what you can do, but you still want to try and get into the highest quality area that you possibly can. So when we're looking at Brisbane right now, if I'm choosing between a southeast Brisbane at say $700,000 versus a southwest Brisbane at $500,000, I know I'm always going to choose the $700,000 that's maybe a little bit more expensive, but I know I'm getting into a far premium location with far premium demographics.
And it's quite easy. Like when you look at what makes a quality part of a city, better school districts, better infrastructure, higher average income earners, lower percentages of renters on average, shorter commute times to the CBD, access to high-paying jobs. It's not rocket science. You can see in Sydney the concentration of wealth is the city centre, north, east and south beaches. You can see in Melbourne, it's the beaches, it's the CBD and it's East Melbourne. And every other market in Australia's got the same things. And when you start to look and groom one suburb versus another, or 50 versus 50, you'll start to see really quickly what makes quality.
Yeah, exactly. So that's sort of the 6th point, is identifying that quality of the suburb. So when we're running through our key performance indicators to identify whether or not a suburb is worth investing in, these are the different things that we're looking at. We're looking at the percentage of renters compared to owner occupiers. We're looking at the proximity to the CBD. We're looking at the public transport options. We're looking at the vacancy rates and how many available rental properties are in the area. We're looking at previous price growth to identify how well it's performed over the recent years and longer term as well. What are some of the others?
Yeah, I love that, man. Like there's a whole heap of stats that we use, but one of the simplest ways that you can do this at home that we've found is just getting on Google, printing out a map, then getting on the sold section of realestate.com and setting a low price point, a middle price point and a high, and then having a different color for each of those 3 categories, and literally just finding the street on the map for the sale price and color coding it.
It's so simple and quite fun, and you can actually completely see exactly how that works in a suburb once you've actually done that exercise, and I think it's so beneficial for everyone.
You put like 30 to 100 data points based on 30 to 100 sales, and you'll just see like Blue's always been like the higher, more expensive areas. Wealthy people congregate, quality parts of the suburb are close together, quality streets are together, and you can even get it to the street level where it's like you can see the concentration of reds, which we classify as like the cheaper pockets, and they're all the main roads, they're next to the cemeteries, they're next to the industrial areas, and before you even start looking and wasting your time on the weekend, you can have a proper idea of which streets you'll buy and which parts of the cities are worthwhile.
And this is where I see a lot of interstate investors or first-timers struggle. Even clients, when they're looking for properties themselves, they'll send us through and it will be on a busier street. So the 7th thing to make sure that you can capitalise on that capital growth is the street. And I think this is one of the biggest ones, which once again, there's no data to back this yet, but it's just an inkling that we have from years and years of experience. And that street is so vital. It is so important to be buying on the better streets. And it's as simple as going, would I freak out if my kids went out the front door if I were to buy this house?
Yeah, you just want starting with a quiet street. That's number one. How many people in the street have mowed their lawns? How many shitty cars are there? What's the percentage of renters versus, mums and dads living there? And is it quiet? Like, not everybody wants to be around commercial, industrial, backing onto a school or a cemetery. So just using your gut. Like, a lot of people don't even want to live on bus routes. So
yeah.
you know, that's what makes a good street, like the higher side of the street, the larger block sizes in the street, like a street that feels like you'd want to raise your kids there for the next 30 years.
I got a perfect example of this. So I live in a suburb on the Sunshine Coast, beachside suburb. Now, I'm in a quiet, family-friendly cul-de-sac. So super nice, super private, really beautiful street. Now, just around the corner, there's not even a main road, but a thoroughfare, which is a bus route, does have a few more cars on it. Now, properties that sell on that more busier road, the exact same property as something that's on a nice, quiet, family-friendly street is about $100,000 gap right now.
Crazy, man.
Like,
and we've seen it in Engadine in South Sydney where we grew up, where mum and dad could have bought a house for 300 grand on a busy road, but they chose to spend like 415 in a really nice, quiet cul-de-sac, the same as you have. That property would now sell for probably 1.7 mil, and the property on the quiet street would still be selling for 1.1. So you'll notice that the difference between that street where Talara is and your street is going to end up being, you know, probably $500,000 in the future, which is insane.
Yeah, that's probably the simplest one that you can use to maximise your longer term position, I think. So quality of street for sure, but then also size of land. As we said, the power's in the land. You want to buy houses on big pieces of land. Now, I was reading an article the other day from Michael Matusik, which was looking at the average land size in southeast Queensland. The average land size in southeast Queensland is 425 square metres.
Yeah,
so it's getting smaller and smaller and smaller. So you definitely want to be above the average. So sort of for us, at least 500, but ideally 600 or more.
Absolutely. You know, the bigger the better, as we've said. And it's not just about the size of the land, but it's about the piece of land. So nice big frontage, nice deep block, you know, home at the front of the block if possible. So there's a nice big backyard, plenty of car accommodation or off-street parking. Like, all of these little things matter. Yeah,
exactly. And then the last thing on all of those, well, the ninth thing that I wanted to talk about is the quality of house. So all of these ones from 1 to 8 come before the house, but the house is also important. So you ideally want a bigger house, you know, a big internal floor plan. For us, we like as a rule of thumb, at least 100 square metres internally, because you know you're going to get a decent sized living area, a decent sized kitchen and dining, then your standard 3 bedrooms or 3 by 3 metres squared. Like, that's, you know, the minimum that you want, but bigger the better on that particular one.
You know, floor plan wise, people in Australia now love like that open plan living. So dining, kitchen, living onto our fresco or the backyard is the way. 2 bathrooms is, you know, ideal, but we still buy a lot of 1 bathroom places because two bathroom joints are hard to find. Some car accommodation if possible as well, you know, especially under roofline if possible. Again, not all of these things are deal breakers, but in terms of you thinking about the ideal property, these all make, you know, part of it.
Exactly. And the good thing with the house is if you do buy a 3-bed, 1-bath, there's potentially the chance that you're going to be able to convert it into a 4-bed, 2-bath in the future. So that's why we say it's the least important of these ones, because you can actually change the structure of the house if you want. Now, the last one I want you to go into is timing, because we think that this is such an important aspect for long-term capital.
You know, I think this probably, like, after we wrote it, it is the most important.
It should be number 1 or 2.
But it's the hardest to explain as well. So the way that I explain it is so simple. If you could have bought Sydney or Melbourne in 2011 and held it to today, that would have been a great time to be a buyer.
Yes.
And timing-wise, if you're buying Brisbane or Perth or Adelaide at the moment, 10 to 15 years from today, you'll be like, 2021, 2023 was an incredible year to be able to buy those markets. It's as simple as that. Now, we've talked about this in a whole heap of other podcasts and videos you can check out. We've talked about the 18.6-year real estate cycle, which we won't go into today's video, but we'll link to in this video below. And, you know, there's so much history here. There's some great books if you like this stuff. The Power in the Land, Fred Harrison, Boom Bust by Fred Harrison. You can read The Secret Life of Real Estate and Banking by Phil Anderson. But if you can learn a little bit better than the average person when to buy, when to sell, or when to hold, it can not just massively increase the gains that you receive on the properties that you buy, but it can also massively reduce your risk position, which was the way and the reason that I found it. Like, I was trying to figure out a way to reduce my risk and increase my capital gains medium term, those books are insane because they look at hundreds of years of American and European history and go, well, this is what we found. This is how it's worked for hundreds of years. This is what you can learn from it.
I love that so much, bro. Thank you so much for sharing all of that. And thanks for watching, guys. If you enjoyed today's video, please subscribe by hitting that big red button below and turning on those alerts as well. If you can please share this video with somebody as well that is thinking of getting into the property market soon. I think it's definitely going to help them make a smarter decision. And also, if you want to see some more in-depth, more detailed content, then jump over to our Instagram page, Pumped On Property, or Facebook. Give us a follow or a like there to stay in touch, where we're just trying to produce some information to help everybody make safer, smarter decisions and get out there and invest with confidence.
Love this one today, man. Thank you.
Thanks, bro.
Sweaty. So sweaty.
Oh, that's good.